DS Markets is a platform that allows owners of assets to securitize, to create financial instruments which are backed by those assets. And by using blockchain technology, we've reduced the friction of transaction and the cost. And through the platform, they can transact in real estate, collectibles, natural resources as fast as companies can transact in stocks or bonds today. Right, so before digitization, these assets will be traded on conventional markets. So, for instance, if you're talking about real estate, then there will be surveys, there will be the information about the transactions being done in an area over the last few months. But once it's digitized, then it becomes a tradable instrument. So there's buy and sell pressure, there's marketplace demand, and that's what determines the price of the assets. Well, we have primarily two challenges. The first one is the fact that we're using blockchain technology, which is a hugely disruptive technology by itself, and that tends to scare organizations and people. Disruption is not necessarily a good word for well-established businesses. So the moment we mention what technologies we're using, they have concerns and are well-founded concerns, but we explain the way we use technology is not to disrupt markets, but to enable markets to become more efficient. So once they understand it, that no longer becomes an issue, but the fact that we need to explain it in itself is a challenge. The second challenge we have is the problems that we're solving with the technology. We actually are the first ones that are trying to solve these problems. We are the first company that are trying to reduce the friction in transacting in illiquid assets. The reason we are the first ones is because it's an industry that's making money from intermediary fees. If you look at, for instance, fine art, auction houses charge double digits, up to 25 or 30% just to the buyer for each sale of a painting or sculpture. So obviously those well-established businesses have been around for 300 years. They don't want that to change. And we are introducing a platform based on technology that enables those operations to be conducted at a fraction of the cost. So it's also a challenge to go into the existing industries that we're trying to enable to be more efficient, to make a compelling pitch, because basically the message is we are reducing the fees that you're charging by 10 times, and that's generally not a good sales argument. So what we found is we're probably better off launching the platform by ourselves at the beginning, get a bit of traction, and then once the well-established players, they see the value, then they may be more willing to talk to us. I think the most significant change that we'll see next year is the mass adoption of commercial blockchains. So blockchain has been going from cryptocurrency in the land of hackers and anonymous people using this cryptographic form of money to do, dubious business activities. Then he moved into the financial sector, where they started exploring the tech, but this tech has been always developed by independent groups of people, open source communities, which may have interests that are not necessarily aligned with the interest of the organization. So I think the learning period between the two sides, the owners of the technology and the potential users of the technology, I think is coming to an end, and the banks and the FIs, I think they have already realized the value, and they're ready to start investing heavily in this. And they need a commercial counterparty, they need a vendor. They can't just use the technology that's freely available, because they need to have an SLA, they need to have someone liable if things don't work. So I think blockchain is going through the same process that Linux had to go through back in the day. To move into the enterprise, an open source solution could be fantastic, but you need a company behind it.